Hey, good morning, guys. I want to turn today into a masterclass teaching of how do you get into these markets with the most accuracy for your entries and exits. I'm going to be doing blind studies today. I will probably be going over the metrics over here a little bit, showing you guys the Ethereum institutional smart money metric. This is a very powerful metric. Right now, actually yesterday at 8 a.m. Pacific Standard Time, this called that the short sentiment for Wells was entering into the market. If you guys look at what happened just this morning, it literally is predicting this drop now. We're seeing the whole market bleed. I'll go into that later. But let's just dive in here. If you guys like anything in this video, feel free to subscribe, hit that bell notification, and that thumbs up. It means the world to me and the team. Let me teach you guys how we have been able to do this. 440% more in the S&P 500. Not even counting these trades down here. So if you guys happen to skip the trade we took on August 17th, you can add an extra 15.5% to this. So it's been pretty staggering what we've been able to accomplish. So let me explain this to you guys. When you're trading, I believe there's 4 things that you need to have in your arsenal that's going to immediately make you a better trader. And here it is. Number 1, I believe you guys have to have some type of indicator or indication if the actual structures of crypto are exhausted, overextended. Now, let me explain this. This trend exhaustion down here, what it does is it actually looks at the waves in the market. So it takes the high and the low. It takes this high and the low. It's actually looking and it's calculating these moves in the market right here. Why is that important? It's important because you need to know that the past movements of crypto will likely be repeated again in the future. So what this does is it actually tracks, it looks back hundreds of candles and it says, okay, here is the actual estimated time where we expect to see the market move back down based off the average movements of the highs and the lows, the peaks and the valleys. I've never explained this even to our members or anyone before. So I just want to give you guys like a masterclass on this today. So that's the trend exhaustion. So I'll pop it up over here to the right. Number 1, you have to have something that actually looks at the exhaustion of a trend, and we use trend exhaustion. Secondly, you need to know what's happening with the actual money that's moving on your exchange. Let me take off price for 1 second here and look at this. When you see whales in the market and they are buying and they're buying, they're buying, you guys must understand this. Not all whales just hold forever. They're going to end up selling their positions and they're going to be looking to take profits, and then they're going to start selling out and then buy back in. What this does is it literally shows you guys what's happening with the flow of money on the ticker as well as the exchange that you're viewing. We never take a trade. I'm not trying to promote us, but we don't take trades unless we see that whales have been buying into the market for a while. Why? Because when whales buy into the market, they are going to eventually start selling back into the market, and this will cause drops back down. So the number 2 point is you have to see what large money transactions are doing. Follow the large money. That has to be number 2, so I'll place it over here. Okay, number 3 is risk management. But before we get into that, I want to show you guys a blind study of how to actually use this together. When you use these two, because before you have to get into risk management, you need to have good entries. So how do you have good entries based off these 2 things we just learned? You must have a place where your trend is extended to the downside, or what a lot of traders call oversold. You must also see whales selling into the market, because then they need to turn around and buy. Here's what we're going to do. I'm going to place a vertical line right here, and we're just going to find the areas where the trend is exhausted to the bottom side, and we see whales selling into the market. Exhausted to the bottom side, selling in, exhausted to the bottom side, selling in. Okay, these areas over here, if you're just looking at this, I guess we can even maybe pull this over here, but I'd rather pull this because it correlates to whales selling. Look at what happens in price. We don't need to look at price. I can tell you guys for a fact that the market is going to move up here because of 2 things we just learned. We've got the overexhaustion of the structure itself, looking in the past hundreds of candles, and then you guys are seeing whales take their money out of the market and they're selling. Look up here. This should correlate to moves up in the market. Exactly at the bottom candle before I move up here. I'll show you guys like this. Right at the bottom before I move up. Exactly at the bottom before I move up here. Exactly at the bottom before I move up. Exactly at the bottom over here before I move up. Okay? That is how powerful this actually becomes, because you don't need to look at price action anymore if you can see that the trend is exhausted and whales are selling. Let me show you guys this the other way. And I have 2 more that I'm going to show you guys, and they're so important. I'll show you guys a secret on the 4-hour time frame, and then I'll give you guys a huge discount on all these indicators if you guys want to snag these. Alternatively, when the trend is overextended to the upside, you guys must understand that the Best place to sell is most likely when trend exhaustion is high. And when? It's when whales are done buying in the market. If you see them buying, they are going to turn around, they're going to sell. So right there, let me show you guys this right here. We're also going to look at this over here, and we're going to look at this up in the market. And let's just look at one more point. Well, money flow high, trend exhaustion is fairly high here. And we can even pull this point over here. What we should be seeing without even looking at price action is the price action should be overextended to the upside because whales have bought and they're done buying, and we're looking for the move back down. Simply looking at the top right section. I don't care what happened in the future here. We're just looking at this. So we should be seeing moves down around this area. We're seeing an exact move down over here, an exact move down over here, literally almost the top over here before move down, actually the exact top candle, and then we're seeing a move down here, and then this literally is calling the tops here before we see moves down. The blind studies, guys, is where you can truly see if an indicator is actually profitable or not. Don't look at price action, look at what it's showing you and then mock it up. Okay, so number 3 is risk management. Let me give you guys a secret that I don't think I've ever shared on YouTube before. The reason why we've been so successful is I've done the mathematical equation on this. On the 4-hour time frame, the most successful take profit is a 4%. And I'll explain this to you guys. It is 4% and is no other profit than 4%. The reason for this is if you guys go over and you look at the strong buys and the buy signals, or you look at just structure itself, crypto will move usually on an average of 4% per signal here. This moved up about 7.64. We can see over here, this moved up to a top value of about 6.26. We can see over here, this moved up to a top value of about 5.86. This is the key, guys. There's a reason why we have the highest win rate ever recorded on YouTube that we can find. It's actually, I was calculating this, 141 wins and 1 loss, and that was on Luna, because we're coming from a strategy that won 126 wins with 1 loss before we started the scalping strategy. And you guys know this if you've been watching us for a while. Now, some of those trades are definitely in drawdown. We know that for sure. But when you guys look at this, you need to understand 4% is the average move on a 4-hour time frame. Put the top and bottom finder on your charts, guys, and look at that. So number 3 is risk management, and that is usually a 4% take profit, because not only a take profit over here, we need to be looking at buy limits as well. Never enter a trade, guys, unless you are entering buy limits. The day of entering all of your money into a trade because you're getting FOMO, let those be done. The reason why you can be successful here is getting into buy limits. Okay, I know I'm going a little bit faster here, but I want to show you guys number 4 here. Let me take this off so you guys can see this. Let me come up here and go like this. Number 4 is something I kind of discovered with the top and bottom finder. I believe now that we have moved in, 2022, these are what are called oscillators. This metric up here, and I'm trying not to turn this into a sales video, but look, this is how we're winning trades, and this is how you get a huge edge on the market, and we're proving it to you guys. But this metric up here does not use any oscillators. It actually uses a mini-max algorithm that looks at overextension thresholds and underextended thresholds in the market. So what it's basically doing is it's playing a tic-tac-toe game with crypto. And follow this, guys. What it's saying is, okay, crypto, you move down right here. That's your move. And what the indicator here does is the algorithm looks to say, all right, let's say we go over here and the market goes here. It's looking to predict where is the next move that the market is going to take before to get us into the trade before it actually happens. So that is why when you guys look at this accuracy over here, you can even see sometimes where if you look at the indicators down here, there are times where this will call drops that you'll never actually get drops anywhere else. And watch this. I'll show you on the daily time frame here, and I'll point out number 4 here. If you go to the daily and go to Bitcoin, look at this. If you look at oscillators, you can see that down here, yeah, we should have seen a move back up. Great, that's correlated. But like over here, we got a buy signal. Like the well money flow sitting all the way up here about at a 43, you wouldn't have got in because it's too low. Take a look at the signal over here. Nobody would have gotten into this because it didn't have the mathematical equation. Like even your oscillators are not going to pick this up. Your oscillators are not going to pick this up over here either because it's looking at a pinned range. All oscillators are pinned to a range. So you need to have something, I truly believe, guys, we've been using this on all of our entries, that is mathematically calculated to look at price action based off a mathematical equation. That's the best way I can explain this. Here's the last point I'll make here, and I'll wrap this up. When you do have oscillators, how do you know if you're supposed to exit here? Look down here, guys. How do you know if you're supposed to exit here, if you're supposed to exit there, or exit here? It's all in the top red section. When you have an indicator like this that's calling the top of the wicks, like literally the top candles before it moves down, this gives you an extra edge. So number 4 really is getting some type of mathematical algorithm on your charts. It really is. And I'll pop it up to the right side over here. It's a mathematical algorithm that gives you guys an extra layer of indication of what's going to happen in the markets. If you use those 4 things, if you look at the overextension of the trend, if you look to see what whales are doing and you partner with them, you also look to see what's happening with the top and bottom finder. Best metric in the industry. Easy, guys. And then number 4, you pair all of this with risk management. And again, the secret, 4% take profit on the 4-hour time frame. This is where I truly believe you guys will be the most successful. And guys, I'm sorry because I know we're going to get comments like, Travis, you're just trying to sell all this stuff. Look, guys, at some point I actually am, because I know people are doing incredibly well over here. And some of you guys are honestly just spinning your wheels forever. And these guys are actually buying our stuff and they're like $500, $5,200, $4,300. They're using leverage. That's awesome. $3,200 in the last 3 days. So we show this to you guys to be like, those of you out there that want to humble yourselves and be like, look, I just need an edge in the market. Not only am I just sharing this with you guys, we're actually doing this ourselves. Like our account over here, guys, we're up $2,014 and we're like dropping in the market. How are we able to do that? We got in and we got out with these indicators. So it's been a lot of fun. And I just want to wrap this video up to say, guys, come over here, make sure you guys are putting these on your charts and get the edge you need. How can you watch this to predict the market moves? Simply go down to the 4-hour time frame if you want and watch to see the things you just learned today. Because here's the thing, you guys can get into trade setups very soon. Why? Because trend exhaustion is coming low. Well money flow moving back down. We're going to exactly what you just learned, guys. Literally, look, the next best entry is trend exhaustion in the bottom, well money flow being at the bottom here, and coming back down here and getting a buy signal. Those are the 3 things you guys just learned today, which would be the next best entry for a scalp and trade on Ethereum. And this is exactly what I'm looking at as well. And then using that 4% take profit. If you guys can just listen to what I'm trying to say today, and I don't see that like rudely or anything like that, but this will truly give you guys a massive edge in the market. Overextension. What are whales doing? What's large transactions doing? Get a mathematical equation on your chart, guys, that's better than any oscillators you use. And then always end it with good risk management. That is how we've been so successful. So all these indicators, they're in the description. I'll show you real quick how to get these. Go over to the indicators tab on our website. Come down here, grab the bundle pack. That's the price versus well money flow. That is trend exhaustion. All 9 indicators are included with that. Snag that. You guys will immediately get a 53% coupon code once you purchase the bundle pack for the top and bottom finder. So 82% off, snag that. Got that? Great. Next, once you guys have it, take that 53% coupon code you get with the source codes and then come over here and click this. Take that 53% coupon code, click I want this, and then scroll down and then enter the coupon code right here. It will give you guys $400 off the top and bottom finder. Okay? That's it, guys. Everything you need to trade successfully, it literally has just been exposed in this video. This is how we've done this, and we have the highest win rate ever recorded on YouTube that we can find. And we have also the healthiest account in a bear market. We have saved ourselves over $33,000 in the market by using the buy limits, risk management, and these indicators. So I hope you guys enjoy this. God bless you guys. I'll see you later. Use everything in the description for the discounts. Set them up on your charts, guys, and enjoy the edge you guys get. I'll see you guys later. Bye-bye.